Reverse mortgages, the strategy that no one explains correctly. And most people misunderstand reverse mortgages, and that misunderstanding is costing homeowners real wealth. And I submit that they're not a last resort. They're a strategic financial tool when used correctly. So let's break down what's actually happening and how smart borrowers are using them today. What is a reverse mortgage? Well, a reverse mortgage, commonly called a HECM loan, allows homeowners 62 years young or older to convert home equity into cash without selling or making monthly mortgage payments afterwards. So instead of you paying the bank pays you. And repayment happens when you sell the home or move out permanently or pass away. And the strategy that no one explains correctly, and here's where most people can get it wrong, is the myth it's only for people in financial trouble. And the reality is it's a wealth management strategy. So smart borrowers can use reverse mortgages in a few ways. First is to create tax-free cash flow. You can access equity without triggering taxable income events. Two is you can eliminate your monthly payments on your mortgage, which frees up cash flow during retirement for life or reinvestment. Three is it protects your investment accounts and helps you avoid selling stocks during market downturns. Four is you can use a line of credit strategically. So a reverse mortgage line of credit option grows over time, even if it's unused. Five is you can improve your retirement planning. You can delay Social Security so you can get higher benefits or reduce portfolio withdrawals. So let's give you a real strategy example. Instead of pulling down from a 401k during a down market, you could use a reverse mortgage line of credit. You can let your investments recover and you can preserve long-term wealth. And that's structure over rate thinking in action. So let's talk about some of the key benefits of reverse mortgages. And number one is no monthly mortgage payments. You stay in your home and you have flexible payout options, whether it's a lump sum, a monthly, or a line of credit. FHA has a HECM program, and there's also non-recourse loans, so you never owe more than the home's value. So who should consider this? Reverse mortgages are intended for homeowners 62 years young or older with strong equity, retirees looking for cash flow flexibility, or investors protecting portfolios, or high net worth borrowers optimizing tax strategy. Now, who should not use a reverse mortgage? And let's be clear, this isn't for everyone. So short-term homeowners, probably not a good idea. Those planning to move soon, probably not a good idea. Or borrowers needing maximum inheritance preservation. So some of the biggest mistakes people make with reverse mortgages is that they treat reverse mortgages as a last-ditch option, instead of what they really are, a planned financial strategy. And what that difference equivalent, what that difference between those two is the difference between running out of money and controlling your retirement cash flow. So why work with Medallion Funds? And most banks don't explain this correctly. And at Medallion, we focus on strategy and not just loans. We structure based on long-term outcomes. We help you think like a capital advisor and not a borrower. So book a strategy call today and see if this fits your plan. That is it for the day. My name is Bill Rapp. I work with a company called Medallion Funds. If you visit my website, billrapponline.com, you can schedule a consultation and we can talk more about your situation. Have a good day.